Hi, this is Stuart Cooper, and today we're going to talk about strategies on how to make a home purchase more affordable. How do you get your mortgage payment lower or get the payment that you can afford or even qualify for? So today's strategy is all going to be about home affordability and getting the payment down as low as possible to improve cash flow and helping you qualify. Not only is this great for home buyers, but it's also great for the listing agent and the selling agent because this strategy will help you move more homes by making it more affordable for a potential buyer. So let's go ahead and get started. Okay, so let's take a look at what I call the rate reduction strategy. So what I'm going to do is I'm going to kind of give you an example of a full purchase price versus reducing the purchase price, and then also looking at an option of instead of reducing the purchase price, we're going to give the seller or the buyer a credit from the seller to buy down the interest rate. It'll be quite apparent when I show this to you. So what happens is we have a full purchase price based on a $2 million purchase. 20% down would make a loan amount of $1.6 million at a current interest rate of 5.125%. And the total principal, interest, tax, insurance payment is $10,995 based off the original purchase price of $2 million. Pretty straightforward. But let's say that the seller and the listing agent agreed to drop the sales price. And in this illustration, we did a price reduction of $32,000. And so now we have a sales price of $1,968,000, which is $32,000 cheaper. The loan amount drops to $1,574,400 due to the lower sales price. And then we're going to still use the same interest rate of 5.125%. And you can see here that the total payment is $10,819, which is roughly a savings of about $175 compared to the full price offer because this is reduced by $32,000 on the listing price. All right. So this is where the aha moment kicks in. So this is what would happen is instead of reducing the sales price by $32,000, what if we left the sales price alone and we took that same $32,000 and we applied it toward buying down the interest rate? And then in this factor, what we did is we bought down the interest rate 2 points. So we have the original purchase price of $2 million where the loan amount's $1.6 million, but now the interest rate is being reduced to 4.25% because we paid 2 points to buy down the interest rate. And you can see now the payment has been further reduced to $10,454, right? So that's a savings of about $540 compared to the full price offer. Or if you compared it to the price reduction, right? The difference between the price reduction and the rate reduction is about $365 more. So by far, the rate reduction is going to have the biggest impact as far as monthly payment. You can see it. It's all detailed right here. And why this is a benefit is because if you have a buyer who's struggling to qualify for this property, he's definitely going to have a better chance qualifying it based on this lower payment than on any other option. Or maybe you have a buyer that's just outside the price range that he's looking for, and you could use this strategy to buy down the interest rate to get him into a more affordable home. And you can see here, this is just a monthly breakdown of how much you would save based on these different examples. And you can see the savings over 60 months. Compared to the full price offer. So you can see it's pretty dramatic. So that's the takeaway is sometimes when you're looking at our analysis on how do we get a client qualified, how do we get this borrower qualified to buy a property, or how do we make it more affordable? This might be the perfect option for him. But of course, this is just a scenario. I would definitely show both options, either do a price reduction or a rate reduction. And this only works if the seller is in a position where they're going to reduce the sales price, of course. But in this market where we're starting to see seller concessions and price reductions, this is actually a perfect strategy to help a buyer qualify to get into that property. And one last thing that might be another incentive for this is the points are tax deductible. So even though the seller is technically buying down the discount points for the buyer gets the benefit of the tax deduction. So since we're talking about 2 points or $32,000, that's a $32,000 tax deduction for the buyer that they can use to write off their taxes on that year of the purchase of the year the property was purchased. So it's just another incentive. But of course, double check with an accountant because I'm not a CPA and I'm not giving CPA advice. All right, so I hope you like this information. If you do, please like it. And if you have any questions or comments, go ahead and post them and I'll try to get back to you. And if you like the information, please subscribe to my channel. All right, have a great day, guys. Thank you.